Is it officially time to get on the PayPal bandwagon after the stock for many years peaked out at over $300 during the pandemic? Shares of PayPal have just been in perpetual decline ever since then. But have we finally broken out with PayPal? Has the technical pattern and maybe more importantly, the financials and the fundamentals started to line up that makes PayPal an investment that'll outperform? Because at the end of the day, folks, that's what it's all about. If you're going to invest in individual stocks, it's all about outperforming. And with PayPal over the last year, you have not been outperforming. Shares of PayPal down basically 10%. If you compare it to a benchmark, most of you will compare it to money under the mattress, but you have to compare it to a benchmark, the XLF, which is the financial ETF. Those shares are up 22% over the last year. If you compare it to Visa, which is the alternative stock that I recommended in many of our videos that you get into instead of PayPal, shares of Visa up 16% over the last year. So as shares of PayPal have underperformed their benchmarks and their peers, it doesn't mean that is the case going forward. Could PayPal be set up for a period of outperformance? Can you step in right now and buy PayPal stock? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. If you've held shares of PayPal over the past couple of years, you haven't been doing well. Over the last year, it's down. Over the last 5 years, it's down 40%. You compare it to benchmarks like the XLX ETF, that is up 44%. You compare it to a benchmark like Visa, that is up 64%. But the past is the past, and now it's all about the future. And what came in today with Q1 earnings for PayPal was revenue coming in at $7.7 billion. That was good for 9.4% growth year over year, more or less what Wall Street was expecting. They did beat expectations by about $100 million or $180 million, excuse me. The company was able to come in towards the high end of the estimates. Well, also, when we go through these financials, nice job controlling costs. We'll take a look at that with PayPal. Now, all important Q2 guidance as well. You're expecting revenue growth in the 7% range. That is not factoring in currency exchange. And I have to assume Wall Street estimates at 7% for the forward guidance. That's probably what they are factoring in. So more or less in line with upcoming guidance. And the company has a history of beating revenue estimates. So you got to assume 7, 8, maybe 7, 9, maybe $8 billion quarter. That would be absolutely fantastic. That gives us confidence for future quarters as well, as you're going to grow in that kind of high single digit, really out into infinity, at least on the revenue side. Now, from a balance sheet perspective, you got a little bit of cash here. This company doesn't have a huge use for cash. They're not buying back the stocks in billion-dollar quantities like some tech companies. They're also not paying a dividend, at least I don't think so at the current time. No, we're still not paying a dividend. Balanced off by a little long-term debt. Over the years, this company has tried to do acquisitions, roll in different products. Just really hasn't done much to the company's financials. Now, speaking of those financials, here's our $7.7 billion worth of revenue. Again, that was 9.4% growth year over year. And you see that here. Last year, we were at 7. This year at 7.7. Here's where PayPal deserves a lot of credit. Their transaction and loan losses, this is a variable cost. This is money they set aside for accounts that they think might be doubtful. But now this may be a positive. It may also be a negative, right? They've cut customer support and operations. So if you're a customer of PayPal, you might not like it that it's harder to get customer support. But from an investor standpoint, look, when you can grow revenue and cut customer support spend, that's fantastic. Even more importantly is they were able to grow revenue, but they reduced their sales and marketing spend from 436 down to 421. Technology and development remained relatively flat. They also drove down general administrative expenses. So very nice job. They have some restructuring and other costs. These are probably not going to recur like if you look forward a year from now. So I wouldn't mind if you want to strip this out. You strip the 164 out from last year, strip the 212 out this year. That would basically give you operating income at $1.3 billion. As it stands, as written, we were at $1.1 billion. We were at $1 billion last year. So you added about $168 million worth of operating income off of, we'll call it about $640 million of net revenue increase. So that's solid. Okay. We also have to factor in the stock is still, I know from a forward price to earnings basis, it's at 13. You got a $70 billion market cap on a stock producing $1.1 billion of operating profit in a quarter. Wouldn't call this wildly overvalued, but again, there's other more attractive, at least from a valuation standpoint, there's probably other attractive things. Although when you pull up the chart of Visa, it's in the financials of Visa, probably going to paint a similar story as PayPal. Now, from a cash flow perspective, things look pretty good. You pull down your net income of $888. That's a lucky number. Last year, you produced $1.2 billion worth of operating cash flow. This year, all the way up to $2 billion. Now, the company doesn't really do much else. There's some big numbers here, but it's really just money changing from cash to treasuries and those types of things. Not a big impact on cash flows, but overall, the takeaway from the financials, very solid from PayPal. Now, a little more minutia on the data. You do notice that transaction revenues, they were down quarter over quarter, but that's expected. Okay, your December quarter is the holiday shopping season. A lot of discretionary spend. You expect quarter over quarter for that to drop. Over the previous quarter from the previous year, you had double-digit growth, 11%. That is very strong. In fact, that's the strongest number that we have on record. What I'm noticing with PayPal is you come down here and you look at active number of accounts. That was actually down year over year, but if you look at these numbers, it's relatively flat from kind of a rounding perspective. So what PayPal's doing a nice job of is they are not able to acquire new customers, but the customers that they have, the number of payment transaction that customer is doing is rising. We see it was up 11% year over year on a quarterly basis. And again, just the number of transaction as well. And those transaction revenues also up double digits. So that's kind of it's a positive for PayPal that they're able to drive more transactions out of existing customers. But some people might worry, is this we'll use a term that the kids are using. Is this a boomer website where people that already have a PayPal account that have been used, like me, have been having a PayPal account since the late 90s, early 2000s? Are we the only ones using PayPal? I know they've got Venmo, they've got some other stuff going on, but we have to wonder where the next leg of growth is. And this company just has never proven itself to be able to acquire something and kind of roll it in. And so that is the question fundamentally from PayPal. And if you've got an answer for that, look, this channel isn't meant to tell you exactly what to do. If you've got an answer for that and you've got a strong belief in that, well, there you go. Now, speaking of strong belief, these technicals have reversed, and we've talked about it numerous times. Every earnings call that we've got on here with PayPal, it has been lower high, lower low, and I've told you time and time again, just be patient. It's a great company. PayPal's not going to go anywhere. This isn't like that cute girl at a bar at 1 a.m. It's not going anywhere. You wait for the breakout. Those of you that were patient will be rewarded because, like I said, over the last 5 years, you've underperformed. Over the last year, you've underperformed with PayPal. I think we're on pace with PayPal to actually start outperforming. You had the breakout more recently on the technical trend. That is very, very positive. Then you had the back test, which is very common. You back tested the top of the channel and you found support there. That is very critical. Folks, this is the start of an uptrend. That is when you buy the stock. If you've been buying the dip on PayPal since 2021, look, even all the way after its big drop, 2022, you have constantly averaged down and you haven't made any money. Those of you that have been patient with PayPal are going to be able to buy the dip on PayPal, get shares coming down a little bit lower, maybe $63, $65 is probably where I'd want to start on this one. Now I'd have a stop loss because sometimes these technical patterns, this is not the reversal. This is a fake out. I'd have a stop loss maybe down here at $57. I'd risk $5 to $6 to the downside for the upside back to make a new high back into the 70s. And then longer term, if this uptrend, I mean, you can pull up a chart of Google, Amazon, Microsoft, Nvidia. They've all looked like this. They made some highs. They had a big drawdown, but then they had the reversal pattern. And this is what you're looking for with PayPal. Wouldn't surprise me if you come back here in 3 months and this is the pattern that PayPal is making. From a fundamental perspective, their active accounts has me a little concerned, but the financials are good enough, and we've got to give this credit for reducing all of their fixed cost, and so that is bolstering up your operating income and your cash flows. Looks like to me, PayPal, while underperforming over the past several years, is probably set up to outperform going forward. Hopefully you enjoyed today's video. We'll be back again later today. I think we got Amazon. Good luck with your investments.